Challenger banks, I don't know about you, but for me, challenger banks, the term sounds a little bit last decade. Banks, challenger banks, neobanks, as they were also called, sort of very much took off in the wake of the global financial crisis. In the sort of the 10, 15 years following that through to today, we've seen lots of them. Some of them become quite sizable institutions. Plenty have also fallen by the wayside. Today, we're going to have a little bit of a look at what the future holds for this particular segment of the banking industry. Ideally, to plot a little bit of a path forward. And also to talk about where some of the opportunities for investors as well as for partners and organizations that want to link in with retail financial services such as brokerage and trading. So we've got a nice broad cross-section of the marketplace with us this morning. We've got John Woods, whose business is about to launch a new challenger bank. We also have representation from Tink, which was bought by Visa. We're very much talking about the kind of the platform, the flattening of financial services. We have Selin Burt Kut from Bitpanda, looking at partnerships and how to leverage partnerships in the challenger banking space. And we also have Felicia Singh, who's an expert in the wealth management space, and also going to be talking about opportunities for wealth tech and challenger banking opportunities for wealthier customers. So perhaps we can start by the kind of issue on my mind, which is challenger banking really a thing anymore? Do we really need challenger banks, and if so, why do we need them? Perhaps maybe Felicia, we can start with you, and then Tasha, we can take some other views as well.
Thanks, Simon, and nice to see everyone. So I think the term challenger bank means different things to everyone, and we had a pre-discussion on the panel that in some cases we're talking about the mid-tier banks in the UK market, which are pushing on competition with the high street banks, and in other cases we're talking about digital banks or neobanks who don't have a banking license and are leveraging tech and infrastructure of others. So that's the first component to this. So if we look at challenges to the traditional Big Four or Big Five in the US market, then obviously that's not going away. And from my perspective, I think that there's even more attention than before on specialist subsectors of the market and how banks can leverage those and deliver solutions. But the key thing is, of course, revenue and profitability for sustainability. So that's my initial view.
Okay, thanks for that, Felicia. Just a quick follow-up to you. Absolutely profitability and revenue, and obviously in this this bit of a downturn, just to put it mildly, that's changing. What do you think you'll see in the sense of how banks are viewing the current environment, or innovators are viewing the current environment when they think about the sort of the strategy and the planning and the building of new banking businesses?
I think we'd see an increase of banking as a service where you don't have to inject the capital into the business, because leveraging an existing banking license and infrastructure technology is far cheaper than putting a minimum of $30 million capital into a banking startup, and that's just for starters. So there'll be a shift more in that direction, and a shift more in the focus on the sectors. For instance, if you're primarily functioning as a payments company, you do not need a full banking license unless for whatever reason you're going to become deposit taking. So the balance sheet structure is going to be more important as well.
Great. I mean, obviously that's a nice, perfect segue into you, Tasha, what you're doing at Tink. It's a golden opportunity in that case, isn't it? I mean, you're working across the space, aren't you? You're working with institutions as well as innovators. Tell us a little bit about your sort of perspective on what's happening, at the moment, and how you see Tink's opportunity within the kind of challenger banking space as a whole.
I think just going back on the point around challenger bank and that terminology as well. So if we think about when the terminology came about in financial services, it was around 2008 when Revolut, Starling, Monzo came onto the scene, and ultimately they were challenging what the traditional financial institutions were doing. So I think it's still a relevant term, but to your point, it's very much about, okay, what do we need to focus on? Because if all of the banks are doing the exact same thing, it's not really doing much serving customers in the right way. But this is one of the ways that open banking, data-driven services can really come and transform the services that you're delivering to customers, whether it's for consumers or for businesses. It's all really around the data that you use and how you deploy that and how you use that to drive efficiencies or to spin up enhancing existing banking propositions. So taking a data-driven approach so that you're able to personalise and also tailor what you're delivering to your customers. So at Tink, we look at things across the entire customer experience. And this isn't just for banks. This is for other institutions. This is for merchant acquirers, PSPs, merchants, marketplaces. But ultimately, if you take a data-driven approach to things like onboarding, you're able to streamline that. Make sure that it's a lot more efficient, being able to take things like identity data to improve the onboarding experience there. But also thinking about loan origination and thinking about challenger banks and profitability, how you're able to actually grow the loan book and actually become profitable in what they're doing. Taking that data-driven approach so that you're actually looking at affordability, creditworthiness, risk profiling customers in the right way. Once you've taken that real-time, up-to-date view, which is super important in this economic climate that we're in, you're able to serve your customers in a much better way because it's personalised products that are suited to them. But also looking at onboarding, loan origination, just the actual general consumer engagement that you have, it's all to do with the data and how you use that. So open banking, we talk about like open banking the term, it could be used for the external accounts that you bring in, but actually it's the general term of data usage and taking that data-driven approach.
Tasha, I think you mentioned that you were with Tink, before and during and now after the acquisition by Visa. Data is exactly the thing, isn't it? The conversation should be as much about data as it should be about creating new banks. Data also implies, opportunity, but it also implies sort of risk to the customer in the sense of how safe is my data with you as a provider. What's been that kind of? What was the challenge of building customer and institutional trust with Tink? Before the Visa acquisition, was it even a thing, a sort of massive concern for the business?
So it's regulated institution, Tink is, but we work with businesses that either hold their own license or they use Tinks. So open banking is particularly in the UK, it's on the premise of GDPR, and there's always a consent there. So users are always in the know. There'll always be privacy policy, terms and conditions that they'll sign up to for that. But ultimately, it's about educated the customer on that customer experience, like what they're going through. They don't necessarily need to know it's an open banking flow, for example. It could be just a case of they understand that they're going to get a better product and service off the back of that. And that's ultimately what challenger banks are doing as well. It's about they're delivering a better product or service to customers. In some way, shape or form, there's a value proposition there. It's either quicker, it's easier to use, or it's cheaper. And those are the three things.
Thanks for that. That's also a great segue to Selin. I mean, you're, Bitpanda, not a challenger bank per se, but working across the ecosystem with partnerships. What's your view on the marketplace and the opportunity for the business?
Yeah. So just to give some context and put things in numbers, Europe is number one when it comes to having the most number of challenger banks. So far, we have 97, 43 started this year. So definitely it's still there to stay. And so what Bitpanda's role is with the white label solution is enabling them to have new revenue streams, because end of the day, 70% are still having simple bank accounts. They're just simply providing cards. And for a customer, it's super easy for them to choose and just go between these different accounts, especially if they're free accounts. So where is that sticking point? And therefore, I think it's super important to look into things like digital lending, digital investing, and what the whole mission with Bitpanda is to make investing fun, is to reach a younger audience and to provide this one-stop shop for our partners where they can design their trading platform, be it if they want fractional stocks, be it if they want metals, be it if they want crypto. This is where we focus and enabling them to continue scaling. And I think that's going to be an interesting part of the ecosystem moving forward.
Very good. Can you give us a flavour of who your other key markets or some of the customers and partners that you have in Europe?
Yeah. So we recently signed up N26, who are using us for crypto. One of our first success stories is also Lydia in France, and this is quite an interesting space where they started as a simple peer-to-peer payment app for millennials, and they now become a neobank. And this is because they added additional services through partnerships. And so they're using us to enable their customers to trade everything from stocks to metals to crypto 24/7. And they're now unicorn status in a matter of a year. So it definitely is providing that, using that data that you're talking about, understanding your customer, understanding that customer journey, building those personal relationships, and taking it to the next level.
Of course, and you mentioned the types of functionality, the types of services that banks can get access to via partnering with you. What sort of trends are you seeing? Obviously, there's been a massive sell-off in the crypto space, as we all know. The market is changing rapidly. Interest rates are rising. What are the sort of patterns that you're seeing?
I think one thing is super fundamental is educating customers, especially now that we are going into a recession. It's super important for them to manage their finances. So let's take buy now, pay later as an example. Do we really need to always go down that route to just put our things and postpone that payment because it's going to, end of the day, collect? Say if you're buying £10 pair of socks, it's super easy to just postpone it, but you don't really need that. Or say you're buying a fridge that you just literally, got broken and you can't afford it. Yes, go ahead and do that buy now, pay later. I think it's super important to know when it's important to spend and when it's important to save. So just taking Bitpanda, we have an academy where we provide bite-sized learning. So we're enabling it for the average person to get into how to invest, the basics of investing. And this is something we're pushing more and more because the average person doesn't find it to be that easy. So we need to incentivize more people to understand what it means to save. And if you can't afford to put away big chunks of money, start with smaller pans. I mean, look at companies like Moneybox, right? It adds up. £1 here, £2 here, putting that away, it can really do you good in the long term. So this is a really main focus area we're seeing in the ecosystem. So second thing is going towards focusing on the next generation. Social trading is also becoming a really cool topic where you can build your portfolio, share it with friends, and talking to quite a few interesting companies who's looking into that to make investing to be as fun as ordering something from Amazon or as easy as ordering a taxi with Uber. That's our focus.
The convenience and gamification model. John, let's turn to you. Last but by no means least, in the sort of this opening salvo, challenger banks. There's a lot of them, aren't there? Revolut, N26, have become sort of successful, substantial institutions. I think they if you equate them with traditional banks, there's something similar to the sort of the 80th largest banks. New Bank, close to sort of market capitalization of the 60th largest banks globally. Is there room for another challenger, at that kind of scale, given the fact that institutional banks, the original incumbents, are still very much in evidence and still very much around?
Yeah, thank you. I think just going back to the original question around challenger banks, an interesting thing. Don't quote me on this, but I'm pretty sure the Wikipedia definition of neobanks 2 years ago was that you are trading on a neo license, and that was the point of being neo. If you go and look at it now, it's changed, and it's just a digital bank. It's just another term that is being looped into that challenger space. I think looking at the market and taking a step back at the bigger trends, yes, the challenger banks, there's lots of them, but what you're seeing with the challenger banks, and if you look at Starling, the model that's now being adopted, Wise have done it as well, is build the front end for your consumer, create that market so you've got a market presence, but then on the back end, you're starting to open up those services to other people. So for those that don't know, you've got banking as a service and banking as a platform where you can just put a white label on top of someone else's license and spin up a fintech or a bank or a financial service organization relatively quickly without the capital outlay. So the question about the challenger banks is, I think there's two plays. The Revolut model is to go and aggregate as many services as possible under one banner and acquire as many people as possible and then try and generate revenue out of that. As the money markets tighten up, they're looking more for unit economics. They're looking at people to be able to be revenue positive quicker, which means that the models, as we've said, are being more refined. So you're going after markets where that revenue can be generated more quickly, which means specializing. So I think what we'll see with challengers is that there are niche players that come into the challenger space, and they are very, very specific and targeted on what they're doing. But counter to that, what we're going to be seeing is that actually non-financial organizations are going to be coming into the space more and more. So what I mean by that is it's 30 times cheaper for a retailer to acquire a member or a fan than it is for a financial service person to actually open an account. So with this banking as a service model, you're going to see more brands and more organizations that already have a customer base or a fan base starting to monetize that base. So an example of it would be, I read this morning, Manchester United have over 3 million, 3 million fans internationally on their database. Well, Manchester United can quite easily white label a solution and spin up a bank and actually bring on board all those international clients. So I think you're going to see more people actually taking out bank accounts and financial services with brands that they have a higher affinity with and they're already interacting with.
So, I mean, given that, so, perhaps you can tell us a little bit about the plans for Zenus. I hope I pronounced that right. And given what Tasha and Selin are saying, this sort of flattening and this integration between between the two different parts of the marketplace, why would anybody want to go and get a banking license on their own if they can sort of do it as on a through a layered approach using open banking rules?
Yeah. So I'm expecting none of you have heard of Zenus. It's Zen in the US. We're licensed and regulated out of Puerto Rico. The reason for that is Puerto Rico is a US territory. It's not a US state, which means that we have an international banking license. So what we enable people to do is, from any unsanctioned country in the world, open a bank account, a US bank account, online without the need to be a US citizen or resident or a registered company. What that means for those businesses is that you can make first-party payments and first-party transfers. So for all the brokers here who can't accept payments from people because they're doing it off their third-party card and you're blacklisted, we actually create a revenue channel in both directions for clients to be able to fund their trading accounts and for brokers to make payments out. And if they're both on the same network, there's no interchange and no cost of transfer either. So for our angle, have you signed up any sort of trading or brokerage firms yet, or is that sort of a part of the roadmap? We have a number of agreements in place, but we're launching this as a product next year. It's in development at the moment, but we have a retail account that's available in the open market. Our target market is South America. We're looking to create accounts and act on a global scale so that people in evolving economies have access to US banking. So offering them the security of getting their money out of their country or not letting it in the first place.
Just a final question on this sort of segment for you, but obviously we've seen, I think it's Marcus under Goldman Sachs hasn't sort of done quite as well as planned. We've seen other of the larger institutions have also tried doing their own neobanks of their own. What do you think makes yours a bit different in the sense of as you come to market now? Are you going to kind of beat the
yeah, we're not trying to take them on. I think that's the first part is that despite all the efforts in the UK to make moving your bank account much easier, you're still more likely to get a divorce or change your football team than you are your bank account. So it's who you open your first account with is mainly who you stay with. I think that's why the US banks have found it harder to come into the UK. Our play is that we're actually a US bank. There's 370 million people in the US. Most US banks aren't looking to go outside of the US, and that's where we're looking to open up the market. And as I say, we're trying to play in a niche space because it is highly competitive, and there's lots of solutions out there.
Yeah. Thanks for that. We will take questions. So if you've got a question for our panel, it's a great panel. make use of the opportunity, and we'll come back to you to ask for that opportunity in a minute. We're hearing a lot about data. We're hearing a lot also, of course, about differentiation. Differentiation these days in a digital sphere implies building a community and working with the ecosystem. Maybe Felicia, do you have a view on how challenging is it now, given the environment and the sort of the changing world and the rush into digital? How difficult is it to build that kind of community, and how do you work with the ecosystem so that the difference that you offer to the world and backed up by the strong technology actually wins customers?
Well, I think a good example is exactly what John is saying. You're not trying to push against the big five in the US, the big four here, because the focus is on a very narrow segment of the market, which for any of those banks they would either not do, or would be like almost a rounding error in their overall P&L. So I think the first thing is the identification of the needs for the market. So in the US, you've seen one or two challenger banks focus on the immigrant community, and you've seen that's where a lot of the payments firms started out of the UK in terms of expats, immigrants, and so on. So the identification and then building that community. And I think in anything in fintech, you have to fundraise because you have capital provisions and you have to set aside the capital provisions. And I think we've all seen, if you don't take a fiduciary and governance-oriented approach to your client funds, even if you aren't regulated and you're acting in some sort of capacity that the individual perceives there's a banking relationship of some sort, then inevitably the house of cards falls down. So I think understanding your segment is really important. And when you're building anything new, you have been laser focused. Because previously I was at a fintech, which was acquired last year, and that's the singular lesson you learn at an early stage, is don't go after everything. Be very narrow and keep building it until you get your product market fit and so on.
Know what your focus is. You mentioned investors there. Do you have a sort of sense of what investors are thinking when they look at the kind of the more mainstream retail banking, retail fintech space?
When you say investors, are you talking about investors who are going to invest in the markets?
Yes,
like
sort
clients
of VC and private equity. Yeah.
Oh, right. Okay. Okay. So that's
fundraising stuff.
Fundraising side, as opposed to investing in the type of platforms and so on, shares and so on. Well, I think we know the market is carnage for anyone who's fundraising now. There obviously is capital to be deployed. So that's what's quite critical, is for anyone. I work with a community of almost 500 founders. This is, just something on the side. And we're seeing this. There's plenty capital to be deployed. But that capital is seeking a specific profile, typically at the moment, in terms of whether you're, at an early stage and revenue generating, whether you have a product market fit, or whether you're at a later stage, how repeatable and scalable your business operations are. But I think that when it comes to investors in the level of scale of a true full banking operation, or even a platform like Tink, that's an entirely different kind of investor, because then you move to the large scale VCs and private equity type firms. Simply, so the type of process that they follow. But I'd just say persistence. For anyone who's out there.
Yes, you can't avoid that anymore. That's for sure. Tasha, on the community side of things, and I wonder, you talked about data at the beginning there. Clearly, that must be a kind of clear way to help, your customers, your partners, understand where their communities are and how they kind of build connections with them. What are some of the sort of problems you're hearing from your partners in terms of how they kind of connect with customers?
Firstly, on the partner space, just kind of following on from your bit, it's really important to be able to build out this ecosystem, particularly as you have so many different fintechs that are spinning up all the time now, and really focused on specific areas of the market as well. So for us at Tink, we have a partner ecosystem. So think of us as a foundational data layer. We can take external data through open banking, but also institutional data as well. So things like current account data, savings account data. We do assets and liability as well. And we can combine that all so that you have this holistic overview of a customer, not just from their bank accounts, but everything else. And then ultimately, if you have this partner ecosystem, you can then do more with that data. So some of the partners that we have, for example, are in terms of money management, which you were talking about previously, Selina, subscription switching. So not only being able to view your subscriptions, but actually being able to manage them and compare them. So energy is a bit of a moot point at the moment, but mobile, some of the discretionary subscriptions. But this is just an example of the different ways that, like, challenger banks, for example, are able to really specifically focus on specific segments of the market. In terms of the challenges, I think a lot of the smaller players in the ecosystem will challenge with the scale at which they have to be able to perform under. So if you're talking about some of the big four in the UK, the technology difficulties that you have with actual integration, I think that's one of the key challenges. But that's one of the key things when you're working with such large institutions, it always will be. They've got legacy infrastructure typically, or tens of systems which you're trying to integrate into. And I think that's probably one of the biggest hurdles.
And that's a story that's been running for quite a long time, isn't it? The whole sort of legacy infrastructure. Are you seeing from your sort of touch points with banks in the UK or other parts of Europe? Are you seeing we're kind of coming through that now, that the banks are sort of getting to grips finally with the legacy infrastructure that they have, or because clearly a big reason for the boom in neobanks sort of over the last 10 years has been that kind of we're not legacy, we're new. In counterpoint to that, of course, is that Revolut and some of these other ones, N26, they're a decade old, so they will start to have their own legacy problems. Where are you seeing the kind of the infrastructure challenge for incumbent banking?
I think incumbent banks understand the challenge there, and they understand that what they need to do that as well. When you've had systems in there for 20, 30 years, it's difficult just to rip that out. So there's the buy-in there, but it's just the case of actually being able to do that and understand the process that you need to go through in order to replace some of the legacy infrastructure there. But the intent is there. And they understand that the cost of acquisition of a customer, for example, is a lot higher when you've got such legacy infrastructure, which is why it's a lot cheaper for challenger banks to be able to do that, because they've got they're cloud native, they've got microservices. It's just a lot more seamless for them to be able to, even if they do have legacy infrastructure of some form, it's a lot easier for them to shift because it's something that's been spun up over the last couple of years.
Selin, you're in this sort of space, on the kind of outside the mainstream space, but trying to work within it. How are you helping companies kind of build their own communities, work with the ecosystem? But also, I wonder, what's the sort of response that you get if you talk to some of the larger, more established institutions? How do they view you? What's their initial reaction when you engage with them?
No, some great questions there. First of all, the focus is to get away from get reach to get rich instead, right? You have that community, you have that customer base. How can we start monetizing it? So that's the number one question that comes up when we speak to investors, right? Because less than 5% of these digital banks are breaking even. So they really need to think about how do you get profitable. So when we approach them, it's completely different from how we approach traditional banks. So just starting with the digital banks, for them it's really about understanding their customer base. Who are they? Who's your audience? And from there we work backwards in enabling them to put in a quick go-to-market, right? So it's faster for them to partner with us than build it in-house, especially because we also have a BaaS model, meaning that we have more licenses than any other provider in Europe, and they can piggyback on it. If they want to have stocks, if they want to have crypto, if they want metals, we can sort that out. We also focus a lot on keeping the customers hooked to subscription models. And what I mean with subscription, it's more like saving plans, right? You get the customer to put away a certain amount of money. This is how we help the digital banks. But when we're talking about the traditional ones, what's good about our solution is that it's super, super modular. And so we need to keep it step by step for the traditional ones. They will not want to use our custodian solution, for instance. They want to keep all the KYC and all the onboarding on their end. Okay, so where are the gaps currently that they're missing? It's building a digital app. It's building an infrastructure that is more compelling for a younger audience. This is where we can help. A lot of the traditional banks don't provide 24/7 trading. They don't provide fractional stocks. So if you are a student or if you have just started working, you're not going to start using them for trading. You're going to start downloading other apps. So this is where they're missing the revenue gap. And this is where we can come in and help them keep them on their main bank accounts and use, the main banks for other services as well. So the conversations are different depending on the type of partner.
John, your take on building the community, but also on the fundraising element. Presumably you're going to be looking for at a certain scale. You'll be looking to raise funds to scale up. Tell us a little bit about the journey you foresee over the coming year as you go fully live.
How much can I say? So we're still pre-Series A. We've been going 3 years, but we've been funded in debt equity. So we have raised our capital. And I think, as someone said, there is still a lot of money out there. It's just not necessarily through the straight-to-market means. Yes, there's a lot of being in the right place at the right time with the right people. I think in this market, it is going to be more about that than following the more traditional routes, I would say. I think it's a difficult. Most people in business now have been through a number of recessions, and actually, it just makes you more creative. It probably makes you more focused, and you just have to work harder at things. So I think, although there will be contractions in the market, there'll still be opportunities. I do think we'll see consolidation. Railsar, I'm not sure how to pronounce it. Railsar put themselves up for sale recently, and having just done a fundraise. There's been a number of down rounds across a number of other financial services. So it's going to be tough. There's going to be contractions, but I think there will still be opportunities. We're optimistic.
And in terms of building the community for you as an institution, Selin was talking at the beginning about literacy, financial education, educating their customers, their users, maybe not even as the provider directly. What's your view on on what you're going to be sort of doing in terms of your messaging strategy?
Interesting question. Yeah, I totally agree with the idea of reach and revenue over reach. I think with our strategy, it will be much like, I won't sugarcoat it. We're basically going to take the Revolut approach, which was look at country by country, look at the specific needs in those countries, and target our marketing to meet those needs. In the main, we are targeting relatively high net worth individuals who are looking to keep their funds out of the eyes of the government. They don't trust the local banking markets. So for us, it's very niche.
Markets, so which sort of obviously UK, I imagine you're based here, but where are the focuses?
The UK, the marketing is based here. Sales and marketing is here, so that we're the gateway across into UK and Europe and Asia. But actually, being in Puerto Rico, we have the US mainland to the north, which is a key market for us of brands looking to create a US bank but sell externally.
Okay.
And then South America is the main target market. So Argentina, Colombia, Mexico are the core territories that we're looking at.
I think you were intimating before about sort of what was the motivation behind that. Perhaps tell us a little bit about that kind of money flow from South America to you as an offshore US financial institution.
Yeah. So again, it goes back to the license, the international financial entity license that we hold, and being the nuances of being federally regulated and not state regulated. It means that if we have a lot of audits, a lot of very stringent audits, and if, working under FCA regulations for 25 years, I still get told, yes, John, but it's not US banking. I don't say that, but I think the main part with the challenges in economies that we just won't be aware of are things like a bank manager turning around and saying, I'm not allowing that payment to go. And we wouldn't even consider that could happen. But that bank manager's looking at his balance sheet and saying, I can't let that money go out because I need it still in the bank. So there are people with money in these countries and educated people that are still taking money out the bank. I mean, we did some market research. We found a lawyer who's taking $250 US dollars out of the bank, out of an ATM every week and putting it under his mattress because he has more faith in doing that than he does banking locally. So it's a real mind shift for us here to think about the challenges that we're solving. But there are just government challenges, tax challenges, and just trust issues. So that's the problem that we're looking to solve.
Would you say that sort of dealing with that is dealing with some of the regulatory stuff is sort of the biggest sort of obstacle to getting the business going, or are there, it always say whenever I talk to somebody that's trying to get a banking license, that seems to be the primary focus of the conversation.
Yeah. I think fiduciary control was the watchword there. I mean, I'm in the sales and marketing side. I'm always contra to compliance, but I think as a startup, we are massively compliant with everything that we do. We're sort of gold-plated in all the systems that we have in place. It's enterprise scale, but for a startup, because yes, the US regulatory landscape is very controlled at the moment. So there are issues with the Fed, not opening new Fed accounts because of the issues they've had with applications, and we've been lots of audits, but we meet them. So there is a lot of controls around it, but that's what offering banking as a service and banking as a platform is there to help people avoid.
Do we have any questions from anybody in the audience? If you do, now is your moment. I don't think. Oh, yeah, we do at the front. Just jump down here at the front. Just wouldn't mind just saying your name and your company, please.
Humphrey.
Who it's aimed at?
Humphrey Cox, Perpetual Limited. I don't know how to pronounce that anyway, but I guess it's sort of aimed at sort of Selin, Tasha, and maybe John Woods as well. But it's about Web3, so I'm just wondering. I'll put it out there. It's a potential service that is clearly something that challenger banks are thinking about, and you didn't ask the question, so I thought I'd.
Yeah, we were coming to the future stuff, but that's a good one. Yeah, Web3 in the sense of what view do you take of the sort of next generation web as the digital world sort of moves up a gear? Do you have a view on where the opportunities might be? Are you seeing anything that's interesting?
We're getting quite a lot of requests. Actually, interestingly, more from a B2B perspective in the Web3, where they want to start onboarding customers into that. And definitely interesting. It's something that's on the product roadmap and potentially we will be building out in the future. But I think will be more and more relevant moving forward. I think, again, it comes back to this educational piece and getting everyone aligned on that in the future.
NFTs?
No, not at this stage, but yeah.
Tasha, I don't want to put you on the spot, but Visa has a dedicated crypto sort of DeFi sort of person on the team at the corporate level. I wonder whether there's any sort of conversations that you're having around, how do we view the future? What we might look into that you can talk about.
I can't talk for Visa, but from a Tink perspective, so we are independent business within Visa. We're not fully integrated with the Visa teams, but really fortunately we're able to leverage some of the benefits of Visa with the global network that they have, so expanding out of Europe. But particularly on the crypto side of things, we're not really aligned in terms of what Tink can do with crypto. Ultimately, what we look at the moment is, as I mentioned before, the different sources of data that we can deal with. But in a world potentially 5 to 10 years from now, I think open banking could potentially include blockchain, crypto. It's just a different form of movement of data, essentially. But from a Tink perspective, what we can do with crypto, a lot of it is to do with how you're able to fund those accounts and using payment initiation to actually move the funds across that.
We're nearly out of time, but I mean, we can get a quick wrap up from each of you in terms of where you see as sort of future opportunities. Maybe Felicia, you want to sort of kick off what you think are the opportunities in the space. One thing I did want to point out is that we've got a sort of mainly all woman, nearly an all woman panel. Banking for women banking targeted at women or products that are designed for women is actually more rare than it should be. Just women banking in Africa presumably will be one of the areas. But I wonder what your thoughts are in terms of where you see the future of the sort of digital banking space.
I think obviously significant growth across all of open data, which is extended beyond open banking to include investments, to include property, full financial wellness views, assets and liabilities. So there's obviously a move in that direction. I think we're going to continue to see dominance of the large-scale banks in the space, and that everyone is expanding their services. So, all clients via their banks are going to be able to access investment products. In many cases, they do already, but especially at the bottom end of the market, you don't see this. Investment products, workplace solutions and pensions, in addition to a whole range of other things on the liability side. So, and all of that will be driven via data. So the more capital a challenger can conserve or utilize, the better they'll be positioned for the sustainability side. In terms of women and banking, I think we have a major issue which has only been worsened through COVID, relating to both the gender investment gap as well as in future gender lens-focused investment. So both sides of that. And in respect of the gender investment gap, I think we'll start seeing some shifts in the modelling, because if you look historically, modelling for investment is driven typically by men on a risk-return basis. The models are built a certain way. Women think and invest differently in terms of outcomes. So what that means is the technology is going to shift. But we've got some time to go before we see that in the market.
Thanks, Felicia. John, I'll turn to you. Obviously, your big plans for the year ahead for your business. What do you see as sort of the future of the challenger banking space as a whole? Are we going to see a whole raft of new competitors in this area of offshore US bank account offerings?
Hopefully not in the last. But
You're the only one.
Yeah. But I do think, as I said earlier, I think there will be consolidation of the businesses out there that aren't ultra focused on what they're trying to do. And there will be some successful businesses that are also just folded into other companies because it's probably the right time for the founders. Again, going back to the other trends, I just think banking as a service is going to be something that we see more and more of, and I'd expect to see brands that don't necessarily play in financial services starting to come out with financial service products.
Tasha, final word from you. Over the year ahead, open banking is proliferating around the world. South America, we were talking about the Middle East earlier. What does the future hold for Tink in the space?
I think to the point that you mentioned before around open data economies, it's the transition from moving open banking beyond just payment accounts or savings accounts or credit cards. It's the transition from moving to, it's going to be open finance, the terminology here in the UK. But actually, how do we get other industries to that space as well and then connect them? So there's that interoperability so that we move away from it just being financial services and banking, but actually moving it to lifestyle. And that's what you see a lot of challenger banks actually moving into. New Bank do it. Revolut do it. It's very much a lifestyle app now, what they're trying to build. And that's the future. That's where we're going to be going with it.
Selina, your sort of take on that? I imagine you're pretty much aligned with what Tasha is saying.
Yeah, no, completely agree. And just some final words. It's either going to be cooperation or consolidation, end of the day. So you either compete as a niche and you're an expert in what you do and you support others in the ecosystem, or you try to build that one-stop shop. And it doesn't matter if you're a tech company or if you're a neobank or if you're a traditional bank. It's really about knowing your customers and building out that full suite of solutions. And lifestyle is key here for them to because we have so many apps on our phones, but we don't use all of them, right? Half of them are literally just staying there, barely opened.
Yeah,
so
well, it's ironic. Tasha working at Visa, at Tink, which is now part of Visa. Visa for 20 years, the conversation was top of wallet. Now it's, of course, it's top of screen. Really, is what we're all trying to go after. Ladies and gentlemen, please give our panel a great welcome. Thanks.